The Aussie share market is on an up ramp toward the end of financial year. Here's everything that you need to know. My name is Jessica Amir. I'm a market strategist with Mumu, and it's great to have your company on this 11th day of June. Happy Wednesday. It's great to see you. So market sentiment, it's red hot, and investor excitement is really ready to ignite should tonight's US inflation data really give us the nod that markets can continue to move up. Yesterday in Australia, we witnessed a history making event, a closing high for the Aussie share market. Let's bring that into focus now with a chart. We closed at 8,587 points. But today we are expected to rise above that and hit an all time high record, a level we briefly kissed on Valentine's Day. That's February 14, in case you didn't know. That was that was a level that we last hit on V-Day, as we're saying, before we fell. Now, expect resistance, but the Aussie share market, or the ASX 200, should glide up 0.3% to 8,620 points if the futures are correct. That's what they're suggesting the market will get to today. But then, if we do see the market hold above that level, the next level that you could be expecting is 8,800 points. Basically, options markets are betting that we could hit this level in about 2 weeks. What does that mean? Well, it means that the market could rise about 2.5% from where we are now. Now, as we progress into late June, remember, we'll probably see a hiccup, as we traditionally do, for end of financial year selling or rebalancing, when people basically sell their winners and sell their losers, and they bring their portfolios back into alignment for tax loss selling. Then bets are suggesting the market could potentially maybe get to 8,900 points by the end of August. Now, should all go well and according to plan, this implies the market will be up 3.7% from where we are now. But let's all see if this takes shape. Remember, markets don't go up in a straight line. I want you to remember that. Many investors, if we experience a pullback along the way, they'll be buying into the pullback, expecting more upside ahead for the new financial year. And of course, the new financial year begins 1 July. Meanwhile, what about US stocks? Well, it's a great question. We saw US stocks move just momentarily away from record all-time highs overnight, and that was really led by Tesla. Tesla shares a standout. Their shares gained 5.7%. They're now back at $326. They led the gains in the mega cap tech space overnight. Let's bring that chart into focus now. So Tesla shares, as we can see, they sold off on the back of that, I guess, a breakup with Donald Trump, but they're roaring back. Now, what is really important is we know that Tesla shares are bounding higher because, of course, in the US on their Thursday, they've got a robo-taxi event, and this is basically where investors will get a look ahead as for Tesla's launch of the cheaper Model Y, which is their cheapest EV yet. Plus, we do know that they're going to be ramping up robotics production. And this, all in all, is expected to drive up earnings. And as I always say, earnings drives share price growth. And this is expected to drive Tesla shares higher over the longer term. But as we say, closing this discussion off with Tesla, the key thing here is their robo-taxi event. That's what you need to watch. Pardon me, excuse me. And the options markets are suggesting that Tesla shares could bound higher and potentially take out the $380 level soon. But let's wait and see. As always, remember, Tesla is quite volatile. It makes particularly large swings. So that's something for you to keep on your radar. As for other moves that you really need to be across and pause and reflect upon, we are seeing chip makers, of course, continue to push the market higher to record all-time highs. Overnight, let's just call them out. We saw Micron, Qualcomm, their shares jumped about 2% each. They basically both touted new hardware to power next-gen AI platforms, while Intel, that semiconductor company or chip old school company, their shares jumped 8%. Now, really important to note that this is not necessarily the start of a new leg up for Intel. Intel's jump overnight, very different to what we saw with Qualcomm and Micron, really ramping up new AI chips. But if we think about Intel, don't be fooled by its 8% gain overnight, because it was on the back of specifically a quantitative, technical trading, basically, after a key technical event occurred. That's all you need to know. But we do need to also consider that the world's biggest chip ETFs, they're still not back at record all-time highs, but they're up markedly from their April lows. Let's just think about one of those semiconductor companies or semiconductor ETFs. It's the SMH ETF. It's up 50%. And here's another one I want you to have a look at. This is a leveraged ETF that basically gives you 3 times exposure to, to the world's biggest semiconductor companies via this ETF, SOXL, which we can see on the screen. This ETF is up an astronomical 175%, but as we can see, it's still got some way to go to get back to its record. This chart may not necessarily reflect that, but I want you to consider that. Also, here's some food for thought. This is a very popular traded investment at Moomoo. In fact, it was one of the most traded investments across Australia and New Zealand last week. What else do you need to know? Well, momentum is behind everything that we're speaking about. And what is fueling this momentum is that we've got the fourth industrial revolution being only in its infancy. And this is driving efficiency, record investment, and innovation. And that's specifically why the world's biggest chip companies, the hardware of AI, are growing their earnings at 43% year on year. NASDAQ 100 companies, as in the biggest 100 companies in the US, they're growing their earnings at 24% year on year. But basically what we're trying to say is that the long-term trends for earnings growth are here. And in the immediate term, we've also got really positive talks happening with the world's 2 biggest economies. That's the US economy and China. And of course, what is also supporting the market higher is that we've got bond yields behaving nicely, and we've got the US dollar being down. So this is a really good set of, ingredients for the market to keep on moving up. What about Australia? Well, I'm glad you asked. Let's talk about an Australian stock. What is leading the Australian share market higher as well are the same things as what's leading the US higher, and it's AI stocks. Up on the screen, we've put Megaport. Their shares up 89% this year. The best performer on the Aussie share market. It's a data center group. They're growing their gross profits at 70% year on year. Pardon me, sorry. What is also pulling the market higher, second of all, are gold companies. So it's not just the AI and software companies leading up the Aussie market. Second of all, it's gold companies. So Regis Resources, Genesis Resources, their shares are up 80% each so far this year. And we're not even at the halfway mark for the year yet. But we do know that these gold companies, they're growing their profits at 40% year on year. Again, nothing else like this. And the third school of stocks that's pulling the Aussie share market up so far this year are nuclear power companies. So, of course, nuclear power, we know that they're key in keeping data centers lights on 24/7 and their power humming along. Boss Energy is a stock for you to consider. They're in some of the world's biggest uranium ETFs, and Boss Energy shares are up 61% this year. Plenty to watch and consider. Head over to Moomoo's platform for detail on stocks and ETFs we mentioned today. Have a great day. Happy trading. See you tomorrow.